Welcome to Everything Co-op, bringing you information on how cooperatives can help improve your quality of life. This show is being sponsored by the National Co-op Bank, NCB. The NCB is dedicated to strengthening communities nationwide for the delivery of banking and financial services for the nation's cooperatives, their members, and other socially responsible organizations. For more information on the power of community ownership, visit ncb.coop. That's ncb.coop. Now stay tuned for your host, Vernon Oakes.
Is Mr. Gary Oakland. Gary is the retired CEO of Boeing Employees Credit Union. He has been inducted into the Co-op Hall of Fame. Good morning, Gary.
Good morning, Vernon. Nice to be here.
Great. Glad to have you on this morning. So, Gary, how did you get involved into the credit union world, into the co-ops?
By accident, most likely. Kind of by accident. When I graduated from university, was looking for a job, and they weren't necessarily easy to come by, but I found one as a teller at a local credit union in Seattle, and telephone company credit union, actually. And so I got started there, and that was the beginning of my love affair with credit unions for the next 40 years.
So what did you major in school?
Economics, just kind of a basic economics, although I did spend one semester of my 4 years in Denmark and at the University of Aarhus. And there I was studying comparative economic systems.
Okay. So you're doing economics in school, get to go to Denmark and travel and see international. Did you learn anything about co-ops in your formal education?
Actually, no, because I do recall when I was applying for the job, I just graduated in economics from a good university. And in order to go and find out what I should be prepared for in the interview process, I had to go, and I went to the University of Washington library to look up credit unions. What's a credit union?
Yep.
I found one article in the library.
Wow.
That was enough at that time, which was mid 70s, to give me a little bit of a knowledge base to be able to talk to the interviewers about what a credit union was. I will say that I think I had been exposed to credit unions and co-ops in general as a kid, because my folks were credit union members. Our health insurance was a co-op, all of these types of things. But as a kid, you're not that interested.
Mm-hmm. So you're at the University of Washington. Did you grow up in Seattle?
No, I actually grew up in a small town in the middle of the state of Washington, Ellensburg, and it was a great place to grow up. There was a state college that was located there. Their primary focus was education, and the rest of the town was ranchers and farmers.
Okay, so you're around ranchers, farmers, and educators growing up.
Yes.
Your parents did belong to a credit union. Your insurance was a co-op, but you didn't know anything about it.
Not really, no.
Okay. So you went off to figure out what economics is about. Did that degree help you in your career?
It absolutely did. When I first started at the Boeing Employees Credit Union, my first position there was Director of Finance. And for a number of years before I got there, interest rate structures were such that deposits were flowing out of the credit union, and suddenly deposits were coming in. And I was hired as the director of finance to try and invest those funds in the best way possible within the limits that are set forward for credit unions. And so, it's certainly initially my economics background helped a lot.
Okay. So how did you go from cashier to director of finance?
Well, credit unions were pretty small then.
Okay.
When I started as a teller at Seattle Telco, there were probably 18 employees. Mm-hmm. So I had the opportunity in my 5 years to be a teller, be a loan interviewer, a loan officer, collections. We built a new building, and so I managed the construction of the building. So I got a little bit of everything in those 5 years.
By being so small, you could just really learn the business.
Absolutely.
Okay. All right. So then here goes Boeing. You get a job as director of finance, so you're investing the funds. So
Correct.
You said deposits were going out when you first came in, and then deposits started coming in. What caused deposits to go out? Well, first, what is a credit union? Give us that first. Make sure everybody knows.
Okay. Credit union is a financial institution that is owned by its members, and it takes deposits in from members and loans it out to members. So there's that family orientation, kind of, so to speak, of being able to provide financial services.
Deposits in from the members and loans to the members.
Correct.
Okay. And when you say it's owned by, it's a financial institution owned by the members, what is that structure like? This is the co-op, right? This is a co-op owned by the members.
Correct. And the structure is there's a board of directors elected by the members, from the members, that manages the direction of the credit union, and then a management team in place to put together the day-to-day operations of the credit union that develops products and services that are needed by the particular field of membership that the credit union is serving.
Products and services. Okay, so I've got a group of people that own this financial institution called a credit union. They can elect the board, and they can run to be on the board. So they can create policy of how the board operates. The board hires management, so there's a management team, and they tell the management team what they want to do. Give them instructions. Here's what we want to do. And then the management team with the board creates products and services for the members.
Right.
So the members are creating products and services for the members.
Yes.
Okay. All right. So if I'm a member of Boeing, I work for Boeing, I work for Boeing, are all of the members have to be an employee of Boeing?
Initially, that was the case. When I first got to BECU, that was in 1980, you had to be a member, you had to be an employee of Boeing in order to be a member of the credit union. And in fact, that was one of the difficult things that we went through. One of the reasons for the flow of funds. The aerospace industry is notorious for economic swings in their production, and so they would occasionally have, every 8 years or so, significant downturns and layoffs. So there were a lot of layoffs, and by a lot of layoffs, I'm talking about maybe out of an employment base of 100,000 employees at the Boeing company, they'd lay off 70,000.
How many?
70,000.
Wow, 70,000.
Yes.
Wow. Listen, we're going to take our first break. Wow, you've got 100,000 employees and you lay off 70%, 70,000. Wow, when there's a downturn. Okay, we're going to take our first break, and we're going to
Okay.
come back and talk about these products and services that the members who own the credit union, own Boeing Employee Credit Union, BECU, what products and services will they need, particularly when they're looking at, there's going to be a layoff coming down the line. Sooner or later, there's going to be a layoff. We'll be right back, everybody. Please don't touch that dial.
1450 WO.
Welcome back, everybody. This is Vernon Oakes, and my guest today is Gary Oakland. He's a retired Chief Executive Officer of Boeing Employees Credit Union. And right before we took the break, he was telling us that there were 100,000 employees of Boeing, and when there was a downturn, which happened every 7-8 years, they may lay off 70,000 of that 100,000 employees, 70% of it. Gary, it kind of reminds me of the fat calf and the thin calf in the Bible. There were 7 years of fat cows and 7 years of thin cows, and Joseph told the king of Egypt what that meant. There was going to be 7 good years and 7 bad years, okay? And that's what sounds like Boeing was all about. So here's what I got from you. That's the members own Boeing, the credit union. The members own the credit union, and they hire management, and management with the board creates products and services. So what kind of products or services could you create to help these employees, particularly in a downturn when they get laid off?
Well, initially, we were fairly restricted in the types of accounts and products and services that we could offer. It was essentially consumer loans, auto loans, personal loans, vacation loans, whatever, and with certain restrictions, some mortgages. And on the deposit side, we basically could offer savings accounts and certificates of deposit. Toward the late 70s and early 80s, the products and services available for credit unions to offer expanded to include money market accounts, a wider variety of higher interest paying, dividend paying deposits, greater access to mortgage lending, but still no commercial lending essentially at all. So those came up, and what we did, because for a while, if you were not employed by the Boeing company, you couldn't be a member of the credit union. And so if you had a loan, you had to pay it off.
So if you got laid off?
If you got laid off, you had to pay off the loan or else. That was one of the first things when I became CEO that I kind of confronted the board, so to speak, saying this isn't right. I mean, this is a point in time when the members need our help more than ever.
Yeah.
And so we created a once a member, always a member concept, so that once you became a member, you were able to maintain that membership for life. So if you got laid off, you didn't have to, scramble about to sell your credit union business. And then we also created what was seminars for surviving a layoff. How we'd go out and go to cafeterias of the Boeing company, going to rec centers, going to churches, where Boeing employees could come, and we would talk to them about what types of things do you need to do to be able to get through this disruption in your life. And talking about things like when you go to the grocery store, just shop the outer aisle, because those are all the basics you need. You're going to just spend unnecessary dollars on the middle aisles. And this is, the whole thing of how to get through there. And it was going through there of this is not your fault. You shouldn't feel guilty about getting laid off. And you're not a bad person. It was all these psychological things that we had to convince them that, things are going to work out. You just need to keep a positive attitude and follow some of the steps that we provided. And so we'd set up interview processes for them, how to interview for a job, those types of things that were part of the seminar.
Boy, just keep a positive attitude. That doesn't sound like a banker to me. A credit union is a financial
I don't
institution.
consider myself a banker. Okay. Actually, bank is a 4-letter word.
Okay. Okay, some other 4-letter words.
Yes.
Keep a positive attitude. So when these 70,000 people got laid off, my father worked for the railroad, and the downturns in railroad meant you get laid off. It was similar,
Yeah.
But you could get called back, and he would get called back maybe a year later.
Yeah.
Called back. Did they happen with Boeing employees? They would get called back, or?
Absolutely. And it was kind of a unique set of circumstances because Boeing at the time was mostly concentrated on commercial aircraft, and there was a lot of military aerospace down in California. So for some reason, it seemed like whenever the commercial went down and Boeing laid off, military was up. And so there were jobs available down in California at the other aerospace companies. So there was a lot of migration back and forth like that, because then when military went down, the commercial went up. So there was a lot of people would come back.
Okay. So did you have branches in California and Washington State?
No, we had no branches. Our operating model was to try and operate on as remote a basis as possible, because we had members in every state. Wichita with the helicopter. They had some military down there. There was back in Pennsylvania, Boeing helicopter. Alabama with Redstone. So we had members all over the country. So how could we serve those without building branches?
Wow. And how did you do that? Particularly in 1980. 1980 year.
1980, we had an interesting mail stop system that had been used within the company for a number of years. And that was pretty effective when all of our members were employees of the company. That became less effective at that point. So starting in 1980, we were able to, probably mid 83 or so, we were able to join ATM networks. So that gave us the basis of getting cash into our members' hands without having to necessarily have the branches. Then we started developing phone systems, dial-in, that you could do a lot of your financial transactions over the phone, and ultimately over the internet over the years. So we were always trying to push the envelope of how we can get these member services into our remote member hands. I will note that starting in about 2000, we partnered with Safeway and started putting unique branches in Safeway stores. Now, what was unique about these is we didn't have tellers, cash in these branches. All of the employees that worked there were consultants. They were talking about how they can help a member's financial situation. If they needed cash, we had an ATM. If they needed, a loan, they could talk with the consultant to figure out what was the best type of loan for him to get.
This is extremely interesting. I had no idea, because I'm used to the credit union I belong to, NIH, Federal Credit Union, National Institute of Health. I joined it when I was teaching at George Washington University. Could join, and I guess I've been a member of that now in 30 years. But there was always a branch. Now, you could do all of these other things you were talking about, ATMs, and get on the phone and check your balances, do transactions. Now, with the internet, you can do I've been to the branch one time in 4 or 5 years. Maybe.
Right.
Okay, but you're well ahead of the curve with this.
We've tried to be. One of the values in being a credit union for the aerospace company, for the Boeing company, is that they had a lot of engineers that were very smart and had solutions to everything. And so whenever we came up with something that we wanted to test and try out, we had lots of input about what was right and what was wrong.
So you had all of these members with all of these skill sets, engineers and whatever, and IT people, whatever, phone people, whatever, that's putting this engineering into Boeing, into planes, commercial or military, and now they're putting it into a credit union, all of these members. That's fascinating. Fascinating. So, we're going to take our next break. I told you time will go by really quickly. And I'd like to come back and talk about what you all did, what programs. You said products and services for your members. So I'm interested in what products and services you had for young people, folks with children, and then all the way up to seniors. We'll be right back. Please don't touch that dial.
1450 WOL.
Welcome back, everybody. This is Vernon Oaks, and our guest is Gary Oakland, who's retired Chief Executive Officer of Boeing Employees Credit Union. And he's getting inducted into Cooperative Hall of Fame, and that dinner is going to be on October 6th in the Press Club, National Press Club in Washington, D.C. And Gary, we've been on the air now almost 9 years. When you get inducted in October, it will be 9 years. We started 9 years ago. And the National Co-op Bank has been our main supporter all of these 9 years. NCB's mission is to support and be an advocate for America's cooperatives and their members, especially in low-income communities, by providing innovative financial and related services. And NCB also works with credit unions. Did you have any opportunity, Gary, to work with NCB to work out any either deposits or borrowing money or anything with Boeing?
Not directly with NCB. I did serve on a couple of on a board with the NCB president. That was Tom. I've just gone blank on his last name, but that was a number of years ago. But I'm familiar with NCB, but I'm not sure that we had anything in particular that we worked with.
Okay. So you went to churches, you went to cafeterias, recreation centers to talk to your members to figure out what they could do to sort of survive a layoff, to plan ahead because it's going to happen. What products and services did the management and the members create for, say, young people, and then for people with children, and then for seniors? What kind of product services?
Well, I think one of the most unique products that we had that expanded or went across all age groups was what we called the small saver account. And the small saver account kind of took the way interest was paid on savings accounts and turned it upside down. So instead of the large dollar savers getting the higher interest rate, it was the small savers that had less than $500. So for the first $500 in the account, you would get something like an 8 or 9% dividend, as opposed to a regular share account that would only get 3 or 4%. And the reason that we set it at $500 is because that was the point at which, once you got the $500, that was enough to buy a certificate of deposit. And so we tried to teach members all along, develop this savings plan, and we'll try and help you as best we can by paying you a higher dividend. But then once you've reached that, then you can invest it in even higher earning certificates of deposit. So that was a product that we came up with.
Before you go forward, I really like that. I never thought of it that way. You turn it upside down. Normally, if you put in a little bit of money, you get lesser interest rate, and if you get, I don't know, 1,000, 5,000, 10,000, you get a higher interest rate. You turn it around, so it's like, okay. Also is interesting to me at $500, there's a research done before pandemic that 47% of Americans would not have $400 if they had an emergency. So this $500 would make your employees, your members, and young or old or whatever, if they had $500, they would be better off than the bottom half of in terms of finances of the American population. And I would hate to think what that is like now, of how many people would not have $400, $500 if they had an emergency today after COVID. Okay, I cut you off. You were going to talk about some other products.
The other thing, when we initially started, and it was all Boeing employees that were members, there was a concept that we really couldn't do anything with their members' money because it was their money, and if they wanted to contribute somewhere, then they would do it themselves. But the credit union shouldn't be spending the members' money that way. We got that turned around where we can invest in the community, because that was something that we think for all of our members was beneficial. And we focused on education, financial literacy, and home ownership on those three particular areas. So from an education standpoint, we created a foundation that awarded, at the time, initially, 20 scholarships to members who had put in an essay. And what I think was unique about the particular award was it wasn't based on their grade point or how they did academically. It was based on what had they done for the community, what had been their volunteer work, how had they contributed back. And so they got the scholarship by being involved in the community.
Oh, fantastic.
That it was great, and to read these essays that the kids put together was just incredible. I mean, you felt so good about the future of this country at the time because of what these kids were doing on their own, volunteering. So anyway, that was the one thing that we did. The other thing we did was working with a lot of different agencies and foundations in the area to encourage home ownership, and how can we make home ownership more accessible, and how can we get people to learn some of the basics in order to be able to get into home ownership. So we created it was actually a subsidiary of the credit union. It's called Prime Alliance, and there were about probably 600 or 700 credit unions that were a part of it across the nation. And what it was a way of making home ownership and getting a mortgage less cumbersome, less intimidating, just easier to do, so that those people that would otherwise have maybe been scared away from trying to actually be able to get into a home.
Okay. Yeah, getting a mortgage and that whole process can be daunting.
Yeah, we identified two areas, and part of it kind of coincided when we had our first two kids, or our two kids. One was, how are these kids ever going to be able to afford an education, and how are these kids, on their own, ever going to be able to buy their first home? And this was, 25 years ago. It is multiple times worse now.
Absolutely, and the cost of education has gone sky. It's gone out, college education particularly. Credit union, owned by the members. Members hire management with the board. Well, the members also elect a board. Board hires the management, and then to create products and services. And you've been talking about the products and services, and it's all around what is best for the members, not what's necessarily best for the stockholders, although the stockholders are the members. It's not even outside
Exactly.
stockholders. Yeah.
We don't have to pay stockholders. We have to pay our members.
Yes. Fascinating, because when I got my MBA, all of the decisions were made on what was best rate of return. ROI was the only variable. Look at all your options, figure out which one gives you the best return on investment, and that's the option you took. And so you're saying things, how can you get folks to get education, financial literacy, and home ownership as the three things?
Speaking of ROI there for a moment, I think an interesting story that with our volunteer board of directors, they would establish of the management team and put incentives in place for us to, do well. One time they were trying to put ROI, because most of these people were finance people from the Boeing company. And so they were looking at the same thing, return on investment. So they wanted to put ROI as one of our incentives. And I went up to the chalkboard and started writing out the formula for ROI and pointed out to them, the only way, there's really no way to improve ROI without hurting the member. You either have to reduce what you pay them or increase what you charge them. Right. So the REI was not something that should be thought of as a good thing in credit unions.
I can argue it's not a good thing in a whole lot of businesses. Okay. Particularly when you look at climate change and the results of decisions made strictly on ROI, not looking at what's best for people or best for the planet. Okay. Right. We won't go down that road today, but it's interesting that you were able to say, if we look at return on investment as a bonus structure, a way of looking for bonus for management, and now you're going to tell management, you got to do one or two things. You got to charge the members, you guys on the board and other members, we've got to charge them more for products and services, or we got to pay them less for when they make deposits. That's the only way you increase it. Okay.
That's not what the credit union's about.
Yeah.
It's the opposite.
How do you charge less to the members for products or services? And how do you pay them more for their deposits? Okay.
Absolutely.
And do it in a financially responsible way. You've got to make money to stay afloat.
You want to be here 10 years from now.
Yeah. So how did you go from $700 million of assets, less than $1 billion, to $10 billion of assets when you retired? Speaking of money and growth and...
Well, I'm going to give you the answer that people always gave me, is because we had an absolute focus on the member. The decision point was not, as we were just talking about, ROI, but what's best for the member and what's best for the membership. So it was with that focus, we were able to get people's attention, and we were able to expand membership, or all credit unions were, after 1998, I think it was, with the Credit Union Membership Act passed Congress, so that instead of being boring employees or their relatives, all credit unions in the state of Washington and across the country could opt for statewide fields of membership. So we suddenly had more members, more potential members available. Now, we focus strictly in the Puget Sound region as far as trying to get new members and put our unique branches out there. But that generated a lot of growth. So we went from, at the 700 million, we were probably in the top 20 credit unions. By the time I had retired, we were number 4 in the country.
4th largest. Okay. 10 times, 12 times fold large. And how many years was that from?
I became CEO in 1986. So 26 years, I think it was, having been retired for 10 now.
Okay. So we're going to take our next break, but did you have fun in those 26 years?
Absolutely. It was fun. It was challenging. We went through the Great Recession, expanded the products and services, but most importantly, I ran with good people, both on the staff at the credit union and amongst other credit union CEOs. That was a saying we had: run with good people.
Run with good people. Okay, run with good people is where we're going to stop and take our next break. Run with good people, and you're also working for good members, with and for good members if they're going to be on the board and hiring you guys and all of this stuff.
Right.
We'll be right back, and we're coming back with our last section. We're going to talk more about the future now when we get back.
1450 WOL, where information is power.
Welcome back, everybody. This is Everything Co-op. My name is Vernon, and Gary Oakland is our guest today. Gary, Cabot Creamery has come on this year to help support us and sponsor us. And we've been talking about the credit union, which is the members were the employees of Boeing, and then he opened it up. And the members then decide what goes on, which we've been talking about. With Cabot Creamery, it's a bunch of farmers, family farmers get together, and they all send their milk to they create this business who takes their milk and they make cheese and everything with it. But these family farmers also are on the board of directors of Cabot Creamery, and they've had their cheddar cheese has won all kinds of awards, and it's just a great place. You can go to CabotCreamery.com, CabotCheese.coop to find out about them. So what I want to ask you before we talk about future, for people out there that's listening, for their future, if they want to join a financial institution that is totally focused on them and what's best for them, they should go out and find a credit union to join. How can they find a credit union to join in their area?
Well, it's a lot easier these days. They can, of course, Google just about anything they want, but there is a specific site that's mycu.gov, and that will list credit unions in their area or any place in the country that they want to be looking for, and then they can find out about those particular credit unions.
So it's mycu, C for credit, U for union, mycu.gov. And
Correct.
You can find out, put in your zip code or what it asks you for, and then you can find the credit unions in your area that you can go join. Credit unions are there for the members, which we've been talking about.
And you brought up the creamery, and I think this is something, in my recollection, was somewhat unique. There's a lot of co-ops out there that are either buyers or sellers, like the creamery, but credit unions, I think, are unique in that the deposits and the lenders are both internal. The members give the credit union the money, and the credit union turns that money back over to the members. Whereas in a creamery, they produce and hold the creamery, but then the consumer is the buyer.
Yep.
So that's a little bit unique in the co-op movement as well.
So I had never thought about a credit union has both the buyer and the seller. The members are doing both. They're investing in, they're giving the money, and then they get the money back in loans. And I've had several credit unions on here, and I remember one of them in Texas was started with 5 people putting up $10 a piece. Okay, in 1930
Ours
or something.
Was 12 people putting 50 cents up each.
Oh my goodness.
Yes.
12 people putting up 50 cents. That's $6.
Yep. And the first loan was a boat.
A boat?
Yes.
What's that mean?
The first loan at the credit union was to a member that bought a little runabout.
Oh, he bought a boat. So it was
Yes.
Okay.
And financed it through the credit union.
Okay. And what year was it started?
1935.
1935. 12 people come together, put up 50 cents each. They have a total of $6 to start a financial institution that's worth $10 billion when you retire 10 years ago.
Right. That's about $30 billion now.
Wow. Okay. So what about the future here? And we haven't talked about biz kids at all.
Yes.
When we were talking about, I was trying to get into that. So let's talk about biz kids a little bit. How did you all get involved in that, and what was biz kids?
Well, the original concept was by the producers of Bill Nye the Science Guy. And what they wanted to do was what they did for science with Bill Nye, they wanted to do for financial literacy with biz kids. And so they came in, and I don't remember exactly how it got started, but I know that the executive producers that were pushing this came to visit me, and we said, hey, this is something that would be great because financial literacy is not good in the United States at any level. So let's try and come up with something that the kids that we can introduce early on, and kids can start building a foundation. So we hosted a gathering of credit unions that we invited from all over the country, credit unions, trade associations, regulators, everything, in Seattle, and had a presentation put together by the executive producers to say, here's what we want to do. We need the money to do it. And so we raised in that afternoon, I think close to $1.5 million.
Wow.
And that kicked off BizKids. BizKids has won a couple of Emmy Awards. They continue to be shown on PBS. I think there's 72 episodes. They're available online. There's teaching kits that are distributed to classrooms. And it's all about trying to give some of the basics of financial literacy early in people's lives.
So I looked it up. You can find it on Hulu and Paramount. Also, BizKids. I found that out. And budgeting, all aspects of finances is just fascinating. Okay. I'll be looking at more of that because I'm finding that financial literacy is still a major issue when most Americans spend more than they bring in, no matter how much they make. Okay, it's every level of whether you make,
the propensity to consume.
Yeah.
The marginal propensity to consume does go up the curve as much.
Yeah. Where do you see the future of particular credit unions helping with the U.S. economy coming out of COVID?
Well, I see it as a great opportunity for credit unions to help get out of some of the malaise that we're in. I think it's credit unions and co-ops in general that can narrow the gap that seems to be out there in so many different segments of our society. And I think that you'll find that there is a lot of growth going on in co-ops and in credit unions in particular. I know in the Puget Sound region, BECU is the number one preferred financial institution, and that includes banks and the like. So I see it as a lot of opportunity, but I also see it as something that is very precious, and we need to be cautious of building the expertise and the devotion to the member that is necessary to keep us differentiated from for-profit financial institutions.
So do you find that you may have a potential problem at BECU at $30 billion? You're so big that you get separated from the members?
I don't think, I always considered us a small credit union because I wanted to, I answered my own phone. I met with members with or without an appointment. And it's that hometown, small town sense that, and respect that you have to have for that person across the desk from you.
Respect for the person across from you. All right, so join a credit union by going to mycu.gov. mycu.gov. If you want to find a credit union, get in there. You can get on the board. You can run for the board. You can go to meetings. You can elect board members. You help to create the products or services. Put in money, and you can borrow money, whether you're trying to buy a little boat or a car or whatever. Last minute, what do you want to leave people with, Gary?
I'm a little frustrated right now with some of the state of the union, so to speak. But I think the concept of the credit union is people helping people. And if we can develop that attitude in all elements of our society, we will all be better off.
People helping people. So I love the values of credit union, particularly ethical values, honesty, openness, social responsibility, and caring for others. I say caring for one another, the golden rule. People helping people. And the credit unions are people first, planet second, profit third, which we talked about earlier. It's not profit first, profit second, and profit third. Yeah. Gary, thank you so very much for taking the time out. I know in California you got on at 7:15 this morning. Thank you so much for taking the time out and sharing with us your wisdom and knowledge. I really appreciate it.
I've enjoyed it very much, and thank you.
Thank you. Everybody out there, please live cooperatively, and we will see you next Thursday.
WOL, where information is power.